Hello, everybody. It's Chuck Carnevale, co-founder of FastGraphs, aka Mr. Valuation, bringing you another Lessons in Valuation 2-minute drill subscriber request series. One of the most requested companies I've been asked to cover, I've been asked several times by several different subscribers, was to look at First Solar Inc. Now, First Solar Inc. does offer some really good lessons in valuation. So let's go ahead and take a look at it here. I've got, obviously, operating earnings, adjusted operating earnings on the board. And I want you to notice that coming into the recession of 08 and 09, the company was putting together some really strong numbers. But then notice from 2009 all the way through 2021, and then, of course, they lost money in 2022, we saw some really weak earnings growth. So if I use my scroll bar here to evaluate this and take First Solar's earnings back to where it was here, we can see that we had very strong growth. But if I cut out those big, fast years there, the growth dropped to about 3%. Now, the point I'm trying to make here is that First Solar's earnings have been very weak for a long time and are now expected to increase. And analysts are talking about increased demand for solar. There's a lot of reasons why analysts like the company at this point and think the company's earnings are going to grow. And the consensus is for 55%, 52%, 45% growth just over the next couple of years, including what we saw in 2024, which is an actual 52% for the year we're currently in. Now, when I put weekly closing stock prices on the graph, I want you to notice when earnings were dropping, and I'm just going to pick a time here to look at it. If you look at the performance the company generated when the earnings were bad, it was a loss of 6.6%. Now, as earnings have begun to recover, the company's stock price has recovered as well. And even though it's down right now, if I calculate performance just since July of 2022, even though the company's price has fallen, it's generating a 28% growth rate. This is a pure growth stock. It doesn't pay a dividend. It's got a market cap of about $13 billion. If the growth going forward grows as expected by quite a few analysts following the company, then you've got an opportunity to make a lot of money on this stock over the next several years if you've got the patience to hold it and if the company delivers on this earnings growth. Anyway, this has been Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool, aka Mr. Valuation. If you liked the video, give me a like. This is another one of my 2-minute drills. Subscribe to our YouTube channel and take a look at subscribing to FastGraphs. It doesn't make any sense to invest in a company or a stock without knowing what the company behind the stock looks like. Thanks for watching.